All right. Good morning. I I didn't want to lose the idea because I couldn't really sleep, and I decided to basically analyze previous price action and things that happened um, over the course of the start of this short week. And really, I realized that trading is very simple. Trading might be hard. It might be uh, not always easy. The setups may not be always, easy to catch, easy to see within the chart. But ultimately, you don't need 27 indicators. You don't need them all at once. You don't need all these confirmation. You don't need uh, a bunch of things that you really should turn off. Like you basically need a few things. You need moving average. You, I could even turn off the smart money concept. That's just these equal highs in the breaker structure. It just literally tells me that the structure of the market, a candle consistency, and a money flow profile, as well as a volume profile, right? That's about it. And the money flow profile, all it is so I can see the highs and the lows, right? So I keep it quite simple. I use these so that I can see point of control. So you need to find where the point of control is. You need to find volume. You need a volume indicator, a volume profile, and then maybe a market structure indicator so that you can see in real time actual structure of the market breaks. Beside that, really, you don't maybe moving expected move that you adjust. You move around previous day high, previous day low, previous week low, previous week high, previous month low, previous month high. Other than that, it's like keep it simple. Keep it as simple as possible. Like, trading is very simple. One thing I realize is every day there is a volume spike at open. Every day. Every single day you have a pretty significant volume spike. Based on something that or someone rather, that I've been following for almost 4 years now. Um, Unfortunately, he's dead, but he has a lot of videos and a lot of books and articles and all kinds of uh, data still available to this day. Is our beloved David Paul. David Paul is a fantastic day trader and technical analysis. Also a teacher, a mentor. He's just a phenomenal human being, right? And he has said before, and I will always remember that to this day because it makes sense, and I've tested it many times. So the every day there's a volume spike leading to a decrease in volume. The decrease in volume basically shows distribution. The price will find a side, a direction, and the volume will decrease as the price will continue going upward. And it works both ways. If you see here, on that day, it reached a peak, and then the volume start rising and the price starts descending, right, on that Friday. And then obviously at the end of the day, you have a massive volume spike because all these zero BTs are being sold. The contracts are being rolled over. People buy for the next day, and there's a volume increase at the very end of the day, as per usual. But the most important part is the opening. So you have that volume spike, and then you have equalizing volume, which shows manipulation, and then the manipulation leads into a distribution, and the distribution happens as the volume decreases. Spike, equalize volume, manipulation, volume decrease, distribution as the volume decrease. Spike. Here we actually, yesterday we actually were manipulated the same direction we distributed, but the volume equalized and then it distributed into highs. So it's that simple. Now, where do you exit? Okay, let me show you. Here, right? Here you're equalizing volume. Now you realize, okay, we're descending. Now the volume starts decreasing. Let's enter long. And then you hold your long. This is the 20 length Trama. You hold your long until the price action finally closed a full-bodied candle under. So now you just entered here. Actually, you could have entered. Yeah, the volume started decreasing here after the manipulation. So you could have really entered here. There, 10 points, 1.46%. Okay, let's try the next day. All right, you have your volume increase, and then it starts decreasing, and it never reach above that, but it is equalizing. So you're like, okay. And then on the next, you also have decreasing volume. Now it's a little harder to see, but it's still decreasing volume. So let's say you entered at this was previous day gamma, and you keep your order as long as the price remain above 20T. Now you're at the very end of the day, close your order, right? Because it would be a 0 DTE. So at the end of the day, you're kind of at the point where on this pullback here, you're pretty much giving away, like Tesla is probably eating more profit than it would eat at this point here. So once you reach the highs and it starts selling off, just sell your order. But you would have still caught at least 6 points until that candle at the very close, 10 minutes before close, finally closed under. Now, as far as technical analysis, if Thursday's high is not visited on Friday, there is a very high likelihood that Monday will revisit Friday lows. That is by technical analysis, and it has been proven 9 out of 10 times during backtesting. What happened? We visited the lows of Friday. You could have entered as soon as it broke above 20T. You could have entered as soon as it broke above 20T. You didn't really need volume, but at the same time, that the volume confirmed that your trend is trending in the direction. You're just adding a confirmation at that point. Because who enters right at the bell? Like that's suicidal. You don't know what's happening. You could still base it off of pre-market. Fine, I get it. Whatever. But to make sure that you are absolutely confirmed that the trade, the direction of the trade that you are taking is correct, you are going to correlate all of these factors together, creating a proper trade. The same day before, same thing happened. You have a spike. The spike leads to an equalized volume. Now it starts showing you a trend, and then the volume is descending. So basically, you would have caught. Now this one was kind of a little shorter, but that's still, it's still 5 points. And then it still didn't close. Still didn't close. So now you created another high. So now it's about 7 points. Now this candle, I do believe it might have closed under, but you also get another spike and the volume starts rising. So that's when you start being more weary of your trade, and your 0 DTE at that point is already Tesla is already pretty hurt because of this pullback, and now another pullback would probably ruin it. So it's probably better to close it at the highs, which is pretty much why the candle retraced, because people just close those orders and just call it a day, right? So I mean that's 6 points by almost 7 points by 10 o'clock um, in the morning, and then you have rising volume into a downtrend. So that also worked here, and you're using different confluence to make sure that you're catching the peak of the day. It works the exact same way on the opposite side, right? You have your volume spike and then it starts decreasing instantly. So as soon as your spike happens, it's 8:30, and then right here it decreased volume, you're in the trend, and then it keeps decreasing, and then volume starts equalizing into rising volume, which leads to a reversal trend. It's that simple. If you're a swing trader, right? You're a swing trader, you're trading multiple days. You have the same bias as a reversal bias. It's a new week. Friday lows are visited. You enter your order here and you keep that order until the price action close below 200 Trama. It is still to today above 200 Trama, so your order would still be going on for a total of 26 points on QQQ. At a Friday expiration, that order, my friend, is up big time. Big time. Like big time. So this strategy works for all kinds of traders: scalpers, intraday traders, swing traders, quarterly traders. I mean, it doesn't matter. It works the opposite way too, as it did here. It worked, and then price close above. Okay, now you just caught 2 days worth of price action. And I mean, if you did enter, that's still 18 points. So this is the kind of stuff that people fail to realize when they backtest their strategy. They make it too complicated. Trading is simple, guys. Keep it simple. Keep the strategy the most simplistic way possible, because that'll first of all reduce the amount of stress that you apply into your trading, and it's also reducing the amount of mental capital needed to trade, because trading is difficult but simple. But because it is difficult, it requires a lot of mental capital to be able to take a position. Now, of course, if you take one contract, you buy one contract for $200 and your account is $2,000, it doesn't seem that much. It's still a very significant percentage of your account, but it doesn't seem that much for a normal person. That's roughly $25 an hour, 25 an hour job for 8 hours. It's one day of work. But for somebody like me that's buying 5 contract of NQ at a time, and sometimes I buy 20 of those contracts, like I'm looking at 150 to $250,000 size of position. It's a it's so much more stressful than a $200 contract or a $468 one unit on MNQ intraday. Like reduce the amount of stress that you uh, force yourself to go through every day to be a day trader. It reduces the amount of extreme decisions you have to take also, because now you only have a few things to watch. You don't have 5 different indicators that tells you different things. Now you're basing yourself off of data that you receive from the market instead of an RSI that's overbought, or an RSI. Let's say the RSI over here was oversold. It's been oversold for literally 2 days, 3 days, over a weekend, and on top of whatever else you're using, a MACD and Bollinger Band. The price action's been outside the Bollinger Band for 3 days. It comes out and it returns outside of Bollinger Band. Like you're making this so much more complicated. Those are lagging indicators. They're not actually market data. The traumas are adaptive moving average. A regulatory adaptive moving average. That's what it stands for. They adapt to the price action, to the current price action, to the actual candle close of the market, which allows you to make a decision upon the closing of that candle. It's a much easier strategy, and it's simple, and it does function, and I use this every single fucking day. Keep trading simple, guys. Most people lose because they make it more complicated. Keep trading simple.